All right, what's going on, everybody? Chris French with TexasWest Capital. And of course, I've got my friends Andrew and Tillman here. Andrew would like you to please take note of his little heading under his name. That way he can feel special. All right. Other than that, hopefully everybody's doing all right today. We've got the FOMC coming up here, folks. Y'all ready for that? I know we are, right, guys? We're always ready.
Yeah.
We have become the farm trout that sit at the opening of the gate and just wait for the pellets that are fed to us every day from the media. It's worthless. It's junk food, man. Come on. It's 25, 0, or 50. Who cares? 25 is most probable, and it's, if it's 50, everybody's it's two doors are bad, one door is good. But the one door that's good, the 25, which will, I think, provide us a little pop, is like, I would see very high likelihood. So I just, hanging on every word of every Fed meeting, I don't think is a way to invest. That's me, just the way I look at it.
But it's not even every Fed meeting. It's every little piece of
That's what I'm saying. We're just waiting for these little pellets that they've pre-packaged for us, and we eat them, and we call ourselves, investors.
Well, meanwhile, markets just continue to hit new highs, right? Other than Bitcoin, and Bitcoin is 6% away from a new all-time high itself. But the S&P hit it the 17th new high for 2025. 17, right? The Nasdaq yesterday closed at another closing all-time high.
It's almost like somebody's printing money. I mean, out of thin air. It's almost like that.
It is. Everybody, for some reason, there's a portion of the commentary out there, especially in Bitcoin world, that we're on the precipice of something bad happening, financially or with the economy, or because of then this, and none of that has happened over the years. And at moments where it's come close to happening, we get an immediate V-shaped recovery in asset prices, immediate, every time. So to me, every dip is for buying and has been for a long time. People can go back. We're getting to the point where a sizable amount of commentators in the world of crypto Twitter don't even remember, or certainly didn't have, beards themselves for the great financial crisis, right? That we've gotten to a point where that was 17 to 16 years ago.
Crazy.
That was a while ago. So if you're 33, 34 years old, you were a junior in high school when that happened. And so the lessons,
chasing Nancy around the playground.
Yeah, and that was the last meaningful breakdown, where the S&P went down to 667, right, as opposed to 6,000 where it is now. But even that, if you were able to look at it in a 3-year time period, was again a move down and then a move back up. It's been a very, very long time in the United States where we've had an elongated, serious recession that was meaningful.
Recessions only can exist when innovation doesn't exist.
Mm-hmm.
Look,
Right.
When innovation is stagnant, and that's when recessions, in my opinion, really set in and take hold. We have everything in the world to look forward to. What a time to be alive. I can name 15 projects that I'm looking at right now that are all game changers, all unicorns, all absolutely off the charts exciting. So, I just don't see it. I see a lot of potential delta to be had across traditional industries and traditional financial markets. I see a lot of mergers and acquisitions at the highest level, at the highest dollar that we've ever seen in terms of purchase prices. I see everything as indicating that the big players are setting up major pieces of infrastructure to support the demand that they see, and they are responding to that. So, those aren't things that are short term. Those aren't things that are midterm. Those are things that are long term. And when you're talking about banks integrating stable coins into their repertoire, how long do you think that's going to be around? And if it's a 50-year fad, let's call it, before we come up with something that replaces that. That's a long time to ride the wave of innovation and opportunity. And if you look at just the banking sector alone, there's enough opportunity to be had. But then you start looking at traditional retailers and commercial players and all of the things that are kind of these peripheral pockets that are massive opportunities in the crypto space. And that's before you talk about AI and all those other things. So I just think the innovation is so strong right now, and the parabolic curve of intelligence building that we have as a culture and a civilization, we've never seen it in any recorded history of mankind.
Well, and to the point about V-shaped recoveries, somebody mentioned in the chat that they should have gone all in back in 2008, and then followed that up with, but I was like 18 years old, and like that. That's the point, right? Like, take real estate for an example, right? Like real estate actually had a dip that could be verified in 08, 09, 10, but the previous 45 years, there was no dip that even approached that in any way, shape, or form. Real estate prices, housing prices went up, whether significantly or in small percentages, basically every year. We're in that same cycle. Since 2008, 2009, there has not been any meaningful downside movement to any geography in the United States that's mattered in terms of real estate prices. We're probably on the precipice of another leg up associated with rates falling. We've seen the 10-year Treasury basically fall from 4.5 to, let's call it 4.05 right now. That's significant. That's a significant number. And sure, that may be a reaction to what everybody believes is a coming rate cut. But that's bigger than what we think the rate cut's going to be today. If the rate cut's 25 basis points, that's double what the actual rate cut is going to be. So, the bottom line is you just got to get involved. And, it's the thesis of this podcast that Bitcoin is the best way to get involved, right? Because you're somewhat outpacing the gyrations of everything that we're talking about. FOMC meetings, real estate prices, interest rates, all of that stuff is inflationary in nature, to where you have to wildly outperform, regular assets to the tune of, if you're not making more than 8 to 9% per year, you're falling behind. That's why Bitcoin effectively is something that we, no question, champion here.
Yeah.
So, everything has to be in context, both historically and then, in the moment. What are we looking at and what does it mean? So, a turn and a shift from the FOMC that has been pushed and pushed and pushed from this administration to lower rates is a good thing. I consider it a good thing. And we'll see where we go and what the markets do in the short term. But I've said for a while now that Bitcoin price has an enormously high floor and an even higher ceiling. And that has played out, again, right before our eyes over the last month. I mean, we dipped down to 107 and change for about 15 minutes, and then back up to 109, back to 110, back to now, again, we've been ranging in between 114 and 117 for the last week, let's call it. So again, the price itself, the price action itself is telling us that, hey, I've got a high floor here. I'm just waiting for the next catalyst and, group of purchases to push higher.
I'm sitting here looking at Twitter X, what do you want to call it there, at Scott's page. And he's got a video there. It says, Sailor says, if Bitcoin goes to 100 trillion or 200 trillion, there could be 200 trillion of credit on top of that. So, I mean, again, if you're coming in, getting into Bitcoin because you're trying to get rich tomorrow, you're not understanding, Bitcoin is, I think all three of us believe that you should. Bitcoin's going to, push forward as that base of that incoming, the financial system as a whole, right? And so exponentially, the effect that's going to have, positively for all of us if we do this right is significant. But it may not just be, initially in the rise in Bitcoin price going up 15x or something. Hell, we're up what? We're up, how much are we off the bottom already? It was like 15 and change. So we're up already, what, 8x or something off the bear market low a few years back?
I don't measure from bear market lows. I measure from blow off tops. I like to look at the extension leg, and measure, try to capture what price discovery may find in that extension leg, based upon fib and a lot of other things. But I will say, Bitcoin is mathematically certain to go up if inflation goes up. So no different than I see in the chat. Every boomer has at least 4 houses. When they start selling, prices have to go down. I disagree with that, respectfully, and I'll tell you why. Housing is in a category, is in a demand category that, freedom is the objective of life. I think everyone innately knows that. And as long as you are having to pay a lot of money to sleep under a roof, you have to work, or you have to have something working for you, i.e. investments. That's a burden that I think a lot of people want to check off their list. Once you have that paid off, it's not like it sits there idle. There's a lot of demand in the rental market to produce revenue against that asset, coupled with the upside of the asset value going up over time, coupled with the taxable value exchange that you can do through 1031 exchange type of mechanisms and keep that value. There's a lot that keeps money in real estate. And it's a lot bigger than just the value of the house. It's more of a tool in the overall diversification of a portfolio. And so I don't think boomers will ever just sell their property, for the same reason why people who don't have to sell their Bitcoin won't just sell their Bitcoin, because they know the scarcity of it and the certainty of inflation is going to drive those prices up. And I'll give you a correlated example here. We knew a guy back 20 years ago when I was a teenager, maybe 30 years ago. We knew this guy that was a great salesman, but he was selling alarm systems door to door. And he came to my dad and said, "Hey, what should I do? Give me some investment advice. Give me some career advice." And my dad said, "Well, you're a heck of a salesman. You just need to sell stuff that's a lot more expensive." And so he got his real estate license, and he became one of, if not the top real estate agent for a consecutive 5-year period. And, was making tens of millions of dollars in commissions every year. And because he lived in the right area, the right fluency, he was pushing huge volumes, all the things worked to his advantage. But the premise here is the same. It's like, if inflation is going to make everything go up in price, there's 2 things that will make assets go up more than other assets: need and scarcity. And real estate's got both of those. So, I disagree that it's going to be ever a big purge in real estate based in dropping in value. I think it's only going to be the prices are going to go up exponentially if the rates go down, period.
And that's going to be especially as long as firms like BlackRock and others are allowed to continue to purchase. I mean, they're going to continue it. They found they can make a lot of money renting these houses out. And
correct me if I'm wrong, but now you can stick your houses in your 401k, or you can pull money out of your 401k to invest in real estate. Isn't that one of the things that Trump initiated, or is yet to initiate?
I don't remember exactly if that was one of the things. That sounds like it could be, though, because he did all the alternative kind of things that you can do with the 401k now.
Yeah, I think he's going to create a 2-way, or he's at least talking about creating a 2-way street where you can take your house and stick it into your 401k basically and grow it tax-free until you at some point retire and want to pull against the cash of the value of the house.
Can you imagine if we actually get to the point where, like, DeSantis is out there saying, "Listen, property taxes are stupid, because as long as you have property taxes, you don't ever actually own your house, no matter how much you pay for it." Man, imagine how amazing that would be, obviously wouldn't be for, businesses and renting out whatever, but for maybe main residents where you don't have to pay property taxes.
If
Man,
you don't want Bitcoin to take away all of real estate's market share or a large portion of it, that's an inevitable. That's called the Bitcoin effect. Cost to carry, when you're comparing both those assets, the biggest downside to real estate is the government's imposed cost to carry, the property taxes. If you eliminate that it makes it, the tax advantages to owning real estate that much more potent and that much more attractive for capital to find a home there. And then when you can put it in tax advantaged type statuses for long periods of time, like retirement accounts, you're talking about expanding that market by hundreds of trillions, in my opinion.
Yeah, it would be absolutely insane. I mean, I know I would love it. I'm tired. I don't know about y'all, but here in Texas, it seems like no matter where you live in Texas, your property taxes often exceed the value of your home, and by quite a bit. There's a lot of fighting with the county assessors everywhere here in Texas about, man, why the heck, my house is worth, $400,000. Why are you valuing it at $650,000 for my property taxes? So, man, I just would be absolutely insane, if we could do that. And, again, that with, with Bitcoin and everything else coming up with it. And by the way, I've been corrected. Yeah, it was Blackstone owns a bunch of residential homes, not BlackRock. I appreciate that. So, and not just Blackstone, other ones as well. There are other, hedge funds and whatnot out there that are doing kind of the same thing with all that. So,
private equity does
yeah.
that. Blackstone is one of the larger private equity firms that does actually pretty heavily invest in residential real estate. Commercial real estate has been a pretty bad bet over the past 10 years. Residential has not. But again, when you have, private equity entities that are buying up properties and you have a falling interest rate environment, they're not going to slow down buying residential properties. Somebody mentioned in the chat, every boomer has at least 4 houses. When they start selling, prices have to go down. No, that's not how it's going to work. When they start selling, there is an enormous amount of demand for houses. There's a lot of people that are, now 28, 30, 32, 34, still living in apartments because they haven't gotten to a place in life where they can afford a house. That demand will be eaten up very, very, very quickly, especially in an environment where interest rates are heading lower. The 10-year yield is heading lower. So again, even short and middle term, there's not going to be a version where, a bunch of boomers sell off houses in the next 5 years and somehow that turns into a downturn in housing prices. That doesn't 2 + 2 doesn't equal 4 in this particular case.
Well, Bernardo has a great question in the chat. What do you guys think is the next big thing that will be with Bitcoin? It feels like all the attention is on other chains. That's a very interesting comment. I would agree with you from an outside perspective. Most of the attention has recently been on Ethereum and Solana. I personally think that there is a movement happening and we're a part of it here at Arch Public. And so, we're I don't know if anybody tuned into the Scott Melker show this week, but we announced we're starting a fund. It's a real estate Bitcoin tax advantaged fund. And it's essentially taking, the big beautiful bill and the tax advantages of the acquisition of specific types of real estate. And we're taking the fund dollars and buying real estate that has high cash flow immediately as a part of it. And then you take that cash flow and you invest it with our algorithms into Bitcoin systematically over long periods of time. So it'd be very similar to taking like, a portion of production of an oil well and buying Bitcoin with it. So you have now 2 horses that you're betting on, the price of oil and also the price of Bitcoin. And that diversified output, if Bitcoin continues to do what it has done, is makes every model the most attractive model we've ever seen. That's just the truth. In fact, you've got to dumb down historical performance and set new metrics as it pertains to what you think Bitcoin's going to do in the future, because Bitcoin's done so well in the past that it makes it sound crazy from a projections perspective. So it is only for accredited investors, but I think it's open to anyone internationally as well. You can reach out to Arch Public. We'll put a link to the fund page that you can sign up and get on the pre-wait list. But the point of it is, and what I think the next big thing in Bitcoin is going to be, is a systematic buying floor that is private companies looking at Bitcoin as a way to offset the risk of their business inevitably failing. So let's take a course in history and look at all the businesses that you can name from your childhood that are not here anymore. And you take any of those businesses and you put this model on their business, and they don't have the failure point that they had in the real world. Why? Well, if Blockbuster, for example, when they were printing cash and had all that real estate with long-term tenant leases that they owned big strip malls in, they could have leveraged all that and put a portion of that into Bitcoin, or they could have put a portion of sales into Bitcoin. And, you know, when the extinction event happened that put them under, they would have been sitting on such a large treasury of Bitcoin that they would have been able to reinvent themselves 16 ways to Sunday, or just become a Bitcoin treasury company and be first to market mover advantage in that. So like if you had done that with Sears, Dillard's, you've done that with, just name any big legacy. Like when you make hay, when the sun's shining, how are you saving those dollars? So the traditional model is to reinvest those dollars as hard as you can into your growth curve, right? Well, by doing that, you're incrementally adding risk to the model, because as soon as you get market saturation, your growth curve starts to flatten. So therefore your revenue starts to flatten. And a lot of people get overextended in their debt of growth and in that capital placement to where they're sitting on little low cash reserves because they've pursued this high growth curve. Well, that's a very high risk endeavor. So what's the way around that? Well, you can go to PE and you can get private equity dollars for growth capital. But there's this new model that's emerging that I think is going to really set people free as it pertains to be self-insuring against that event with Bitcoin savings out of net profits, right? Become your own insurance against your extinction event by doing something that isn't correlated to your primary business and its success. So you could do that in a lot of different ways, but most ways that present the upside that Bitcoin has have carry cost, operational risk, scalable capital costs and risk. There's just an infinite number of things that are going against that becoming a scalable solution for you. Bitcoin is that scalable solution. So by injecting that into a fund and having real estate that has cash flow that's producing a constant buy floor for the fund, you're getting a very smooth cost curve into the Bitcoin accumulation price that you achieve, which gives you exposure to Bitcoin's price over long periods of time, which I believe, Andrew believes, I think you believe, Chris, is the best way to be recession proof or be bear market proof. And doing that on the back of earned dollars versus debt dollars is also a much more riskless way to manage kind of that upside that you're going after. So that we're doing that. If you're interested and you're an accredited investor, reach out to us. We'd love to kind of walk you through the nitty gritty of it. But that's the answer to my question as it pertains to what I think is next for Bitcoin. Is no different than 401ks have become a constant buy floor for the S&P 500. I think corporate balance sheet and treasury sheet applications of saving dollars from net profits is going to be the game changer. And if you can think about if every profitable business allocated 10% of their net profits into Bitcoin, in most cases, that, if Bitcoin does what it has done, represents a doubling of their net profits. So 10% allocation gets you potentially 100% output. 10-to-1 value proposition sound good to me. I don't know about y'all, but it's something hard to ignore.
Yeah, just a little bit, right?
Yeah.
Yeah, people, we announced this yesterday, and we've just had an outpouring of interest because, just the phrase tax advantage Bitcoin fund is resonates with people. Because, people that have, are invested in the markets oftentimes, or real estate, or any asset of any kind, often have, the need to offset taxes. And so having the ability to do that in the fund, and then the amount that you deposit is now associated with real estate, triple net, ongoing constant revenue streams that turn into more and more and more Bitcoin. I don't know. It sounds like somebody kind of figured it out, and figured out that there's a way to build a bit of a machine here, that has very, very few holes in it.
Well, don't
And
compound like debt. Michael Saylor is compounding something in order to compound his Bitcoin stack, and what he's compounding is debt. He's compounding convertible shares, right? So he's borrowing against future share value, essentially, to buy Bitcoin today, and he believes Bitcoin will outpace that because there's a positive MNAV, which is a positive multiplier on share price. So it is a good thesis from a debt mechanism perspective, but that's only if you're restricted to debt structure mechanisms. Like if you have positive cash flow that you can appropriate, and you can focus monies on compounding the cash flow that then compound your treasury, now you're cooking with some gas. Now you've got a real sustainable model that now you're just hungry for the highest growth cash flow potential projects, and you look at that as like adding horsepower to the vacuum cleaner that's pulling and extracting Bitcoin into itself.
So
well, it's the kind of vehicle that, as soon as you get involved, you've effectively hit a triple, meaning that you get short-term benefit in terms of the tax advantage. You get medium-term benefit based on you're investing in, real estate type based asset, triple net, revenue producing type of entities. And then third, you're investing in Bitcoin. The home run happens potentially when Bitcoin goes up from here, right? So if we get anywhere near, if we, let's say in the next 5 years, we just go to 350K Bitcoin, right? Which would
grand
be
slam home run compared to every comparative
you move from a triple to a home run. But again, just effectively, when you invest in the fund, you're kind of born on third base with those positives that are available to you almost immediately. That's an extraordinary project to be involved in. It really is.
So basically, what you guys are doing is you've taken what Grant Cardone was doing, and your twist is that instead of just getting the Bitcoin and holding it, then you're using your algorithms to create more Bitcoin along the way as well with that's already come in.
There's more twist than that, but I'll let Tillman talk about it.
Yeah. So Grant, I think is a pioneer. Obviously, we have a lot of respect for him. We've communicated with him. I don't know the ins and outs, to be fair, of his complete offering. I do know that he's taking underperforming REITs and he's making them exceptional with the application of Bitcoin. We're taking the opposite end of the spectrum, which is taking the best performing assets we can find and acquiring them for their cash flow value. That's very different. And so, what my premise in the market is if Bitcoin represents a value multiplier of X, right? And you're able to overcome a lot of loser businesses. You can take a zombie company that has zero revenue and you can inject that value multiplier, and now there's a positive value proposition for investors to place capital. So if it can take a loser and make it a winner, what can it do with a winner? And so you ride that wave as hard as you can until it's not a winner. And there's still a huge market for a lower yield cash performing property that has intrinsic value from a real estate perspective and from a tax advantage perspective. So if you can find an infinity loop where you're rolling in the most highly profitable, highly scalable type opportunities that are attached to large cash flow, then you have this, again, you have a large horsepowered engine that's accumulating Bitcoin every month with that net operating income versus looking at a REIT and injecting Bitcoin as a base collateral and then putting tenants in there and then trying to refinance that, extract more capital to buy Bitcoin. That's a different mechanism.
All right, well, good. So, I mean, hey, it's definitely something worth checking out, guys. If you can get real estate and Bitcoin and appreciation of, the amount of Bitcoin you have, not just in the value of the Bitcoin, I mean, definitely something, again, if you're a accredited investor, contact these guys, check it out, see how that works out for you. Exciting times. So are you guys going to then, is this going to be something that you guys are doing in addition to Arch Public, or is Arch Public just going to eventually become this thing?
Arch Public has been asked, we've been asked 1 million times by customers and both commercial and retail, like, why don't you all trade your own fund? Why don't you start a fund with your algos? And the truth of the matter is because our passion was to bring something to market for retail that they had never been exposed to before and never had access to before. We had been in that spot. We felt like there was a ton of pinned up demand there, and I think we were right in that regard. But as it pertains to commercial application and trust companies, treasury companies, balance sheet companies, we needed a partner to bring into that to really, be the experts on the real estate and the tax side that we are not. So we have that partner, and it's just been a product of being in business and finding the right partners to put this deal together and to have the application where we feel confident in its degree of success. So we're at that place. We feel exceptionally confident based upon how many people that we've put this in front of that are exceptionally smart, that have said this is a much better alternative to anything that's currently available from a Bitcoin balance sheet treasury company perspective. So, that's a good start. And we like being on the bleeding edge of pioneering things in the space. And most of the time that we've ever been successful, it's been based upon filling a need for ourselves that we see and a deficiency in the market and trying to fix that deficiency. And there's a big deficiency in how people look at treasury companies right now. So much so, I mean, it's not as bad as what people identify NFTs are as, but it's getting close. Like, because this is the most bastardized version that you could ever dream up. What is going on right now?
So think about this. So there's a conference right now in New York City with Michael Saylor. It's the Bitcoin company strategy unconference or whatever. And for 4 or 5 years now, Saylor has been doing these things. But what has been his message? His message has not been strip your company of everything it's ever done and just buy Bitcoin, and that's now your company. That is not his message. It has not ever been his message. His message is Bitcoin is the best asset / collateral that you can put on your balance sheet. You should add Bitcoin to your balance sheet. Let me help you or show you how, but Bitcoin should be a part of what you do from a corporate governance, wisdom. It's just the right thing to do for all of these reasons, but it should be on your balance sheet, right? Even going to larger corporations and having sit downs and that's been his message. His message has not been, do a reverse, transaction thing for a company that's dead and then take over the symbol and rechange it and just buy Bitcoin and then you're good. That's not been his message at all. His message is, Bitcoin is a balance sheet multiplier and turbo booster, and you should use it as such.
Well, I think MicroStrategy offered the market exposure that they couldn't get anywhere else. It's no different than, the first company that got their dispensary license and they build 30 dispensaries right on the border. Guess what? They're going to get a lot of business. I would guarantee it. So, MicroStrategy is that. They're just the first dispensary on the border. I think you're exactly right. It's one of those classic examples of do what they do and not what they say.
Mm-hmm.
What is he doing? Well, he's buying Bitcoin and he's putting it on their balance sheet and he's not selling it. And he's doing it by any means necessary. He just happens to be riding a horse that doesn't have any net profits to appropriate to the purchases. So he's left with nothing but a debt mechanism, which also fulfills a need in the market. And that's why it's been so successful.
It seems to me like we're kind of getting to that point in all these discussions we have where we're saying, listen, getting Bitcoin to be a treasury company, even of itself, for most people is not going to work. If you're looking to invest in companies, look for those companies that have some other thing going on where Bitcoin is just a part of what it does. Would that be fair to say?
Yeah. Well, I just think it's a safe haven asset that Michael Saylor is right about something that has outperformed every other private equity opportunity, like every other public stock, including the Mag 7 that exists. So, if it's outperformed all of those, the question is do you have exposure to it? And if you don't, what is that percentage? And that should be applied, that logic should be applied more so to companies than even individuals, because companies don't die if they don't ever run out of money, and people do. And so if you set up a Bitcoin treasury component to a company and you're right, and let's say Bitcoin does over the next 16 years what it's done over the last 16 years, or even mute the hell of it down to, let's just say it 10x's to $1 million, and it's basically rivals with gold from a market cap perspective. That 10x, if you're taking cash flow from a highly profitable business and you're buying in over that time period, that very well may be the staying power that you need when you need to reposition yourself in the market or reinvent yourself. And I would argue that there's nothing else that can give you that protection, or at least that is scalable without the incremental risk that goes along with scalability.
And I would say that actually follows, as an extension of the main thing that you guys and I have talked about the entire time, basically, that we've had this show, which is that, Bitcoin, we should be investing in Bitcoin, not necessarily for its fact it's going to get you rich, but for how it can protect you against that upcoming printing and what else is going on. I mean, basically, this just seems like it's the same extension of that, right? Company buys into Bitcoin to protect itself from whatever's happening in the future, whether it's, printing of money, whether it's losing share of whatever business it is, whether the business is just kind of going downhill, but it's that protection against that complete just obliteration, right? And so,
well, I'm the analogy guy. I love to give analogies, and it'd be like you building a beautiful sandcastle. Imagine the most beautiful sandcastle you can imagine that's 10 feet wide and 10 feet wide, the other 10 by 10, and it's 10 feet tall, and there's drawbridges. It took you 6 weeks to build, and all of a sudden, the tide is coming up. And it's eroding that thing so fast that you're doing everything you can to keep that thing from crumbling. And you're keeping it, you're patenting it, you've got 10 other people patenting it. That's what keeping up with inflation is like. And you have to be out there investing your dollars and patent stuff and figuring out how to outperform inflation just to keep your sandcastle from going into the ocean. Bitcoin is like pouring resin over your sandcastle, and every time you turn around, it's growing in size, and before long, you literally have 100 by 100 sandcastle on the beach that can't be eroded away. That's literally the power of Bitcoin. And so you just start with the smallest sandcastle you can and just watch it grow. Just watch that sandcastle before your eyes not only not erode, but actually grow in size. And you can prove that to yourself with one sat.
Yeah, there you go.
One sat.
So let's talk about gold here real quick in relation to Bitcoin. Gold continues to just push up there, nearing 4,000. Best year in like I think 40 years. Bitcoin or gold is having its best year. Now, I believe, if I'm not mistaken, maybe y'all can check me on this, but I think usually with the way the Bitcoin cycles work, the way Bitcoin rallies is that gold goes first and then Bitcoin follows. I think that's the way it is there. Correct me if I'm wrong on that. But would that then be saying, I know Peter Schiff is all up in his feels and he's feeling good, about gold, and he can't let a day go by where he talks about how well gold's doing and how Bitcoin isn't, pushing up just yet at the moment here. But do you guys foresee some kind of movement here as we kind of continue on here, where gold finally kind of starts pulling back and Bitcoin just takes off and eats its lunch, and ultimately Bitcoin does better than gold?
Listen, gold goes up in value for the same reasons that Bitcoin goes up in value, right? It has some scarcity that's limited against the production of the dollar, and that is the measurement. That's the ratio that you're measuring in the price of gold. I don't think gold's as attractive as silver right now, personally. That's just my personal opinion. Because what is that?
I love gold.
Mute the child in the chat. I don't know. Gold. I've always been taught to look at gold as being able to buy the nicest custom suit. That's the gauge of where the price of gold should gravitate to over time. I've heard that since I was a young boy from a lot of great investors, which is like, back in the day when gold was $100 an ounce, you could go into the finest tailor in New York and go, give me the finest suit that you can buy, and you could slap that gold piece down and it would get you that suit. Well, today, $3,500, $3,700 is about what it would cost you to get a tailored suit in New York City from the finest place. And so, you look at that and you go, gold probably does have some room to grow, but what is it, a 2x from here or a 3x from here tops? I think silver, if you look historically against, number one, the industrial use that it has and the destruction of the supply that you experience on the silver side, is something that is eroding the scarcity or making the scarcity more and more over time. I also think that silver has traditionally been a 16-to-1 ratio of gold, and now I think it's like an 86 time ratio. So you just have this massive historical gap that may or may not fill, but if you look at 2,000 years of data, one would tell you it would tighten. And so, for those reasons, I think that, you're going to see, I would lean more towards silver than gold at this point. Even though gold probably does have a, potential doubling in front of it.
Yeah. Tradefly, man. Good to see you showing up. Y'all should follow him if you get a chance. Check out his streams. Tradefly talks with me on the panel there on Tuesdays on this trading.
We can send money and then say stuff on the show. Oh,
not
man.
you.
Yeah, I didn't know that. I need to get on that. I need to send some stuff.
So somebody go freeze his bank account real quick. Freeze his gold. Let's go tell him what this guy's gonna say. But anyway, man, it's just, we've got so much coming up right now. And I think, again, I think it just continues to be that, dips have been for buying. And, we are basically you can argue we had a recession during COVID that lasted, a day or something. That was the V recovery of all V recoveries.
Listen, we bombed Iran this year, and it was like a 3-day event in the market. Think about what that would have looked like 10 years ago or 15 years ago.
Nobody even remembers.
That's a 1-year news cycle event, and no one even talks about it now. We flew some, billion-dollar airplanes in the sky, had some parades, and now we're on to the next.
And even before that, we, the whole Ukraine thing, when Russia invaded Ukraine, everybody's like, oh, that's the end of it. Top of the market's in. We're warring, or they're warring or whatever, get involved. But here's an interesting thing. When it comes to charts, usually things like wars and whatnot they happen when you're at the low, when you pull back, usually, right? So if you think about even if you think about what was going on with the .com bubble, right? And then we had 9/11.
Yeah, but there's a big distinction, Chris. There's a huge distinction you're not mentioning. When we need to inject liquidity in the past at cycle lows, it was to inject liquidity into a failing economy to artificially start it. We have to inject liquidity now to keep up with our debt burden.
Yeah.
That's the difference. That is 100% the difference, man. We are on a debt curve, and the cost of our debt forces us to print more than we've ever printed by a factor of 1,000 in the course of human history, or at least since America has been printing money. So in my opinion, that is the difference between all other liquidity injections and this one.
Yeah, and Sats McGee brings up a good point. He says Poland shot down a Russia drone last week. The market didn't even budge. It was like the market didn't even know. Yeah, I remember seeing that and going, "Huh, that's interesting." And market didn't.
Well, let's call it the Vanguard BlackRock effect, right? That ETFs exist. They are now ubiquitous. ETFs are effectively 70% of most people's portfolio in the let's just call it high net worth, and then one rung down in the mass affluent space. And so every month you're getting new deposits into those entities. Those entities are then just buying up the shares that are in those ETFs, and those ETFs are not actively managed either. They're effectively set, associated with whether it's the S&P, the NASDAQ, or a subsection of those two indices, or industries inside of those indices, and they don't change. The companies that are inside of those ETFs, they don't meaningfully adjust. Yeah. And so you're getting, ongoing investment into portions of the market that not only never change, but they routinely just inch higher and higher and higher and higher and higher. And it's what has put a quote unquote floor into the markets. It's interesting that when's the last time you heard that huge outflows out of equities into bonds or into money markets has actually happened? Those headlines are more than 10 years old. That doesn't happen anymore. Those types of data points have basically vanished. Yeah. Now, it may be that you get a slowdown in movement into equities, but that's just a slowdown, meaning that, okay, we had 2% that went into equities this week as opposed to 4% or whatever it is. It's just a slowdown in the amount that continues to go into equities and ETFs. So it is people need to be aware. Jeff Park does a really good job of working through some of this stuff that you have to understand that we're living in a world, again, with equities that have a very, very high floor. So to go and find additional alpha, or to go and find additional performance, you've got to get into some pretty weird stuff.
Well, right? And then when you find it,
guys our age would think is pretty weird, like real option stuff / Pokemon cards / whatever coin / all kind of in this one bag of tricks over here that most of our friends and people that we know would be like, what are you talking about? What are you investing in? But that's where additional performance is siloed, because the rest of this is just programmatic. It's just going to continue to happen, right?
Yeah, it's like the liquidity depth draws in different segments of the market. And so, these smaller markets that prove themselves, even meme coins, for example, and the DEX exchange money that has been made and the central exchange money that has been made. I mean, look at the first thing that the Trump sons got got up and running was World Liberty Financial. Why? Well, because it's a cash cow. It's a license to print. And that is going to catch a lot of market share based upon this, merger that's taking up place between traditional finance and the crypto space. And it's only going to get more intense, and the multiplier is only going to get higher and higher until, it's the market saturated, which we're a long time off of. But, I look at it like this. If you have money and you're trying to make money with that money with no human people involved, you're competing with a commodity, and a lot of other people have that same commodity. So a bond would be that, right? There's no business behind the bond. You're just reaping benefit based upon the liquidity injection or the total value lock and your contribution to it. No different than if you injected that capital into a DeFi exchange. You're providing a depth of liquidity and value to the marketplace and all those things, and you get paid for it. The difference is when you inject humans and the creativity of humans and the capital. So that's a business, right? And if you have really smart people and they have a lot of capital, there's a whole lot of alpha that can be achieved. And that is where VC and private equity, that's where they thrive. That's the only way in which they can place a scalable amount of capital with the upside and the hit rate that produces the returns that are attractive to their clients. And so they're gonna. Well, why would you ever deviate from that if you have a big enough pocketbook to essentially bet on every horse in the stable, and one of those horses is 100 to 1 or 1,000 to 1, and there's only 10 horses. Sounds like a pretty good use of money to bet on all 10 to me. You know what I mean? Like,
Exactly.
yeah. So that's the game, and I think that's only heating up. I think that these look at Gemini.
Yeah.
Y'all saw the balance sheet and the income statement, and the market all had the same response. I'm not, it's not just me. It was like, how do you lose money in a bull market as an exchange? Like
Right.
that was kind of like the headline across all of that analysis. But in spite of that, they're partnering with NASDAQ.
Yeah.
They're getting a $75 million credit line from Ripple. Like, they're moving and shaking in this to collect market share. And, it doesn't really matter what their net profits are right now. It's kind of the wild, wild west as it pertains to just getting a piece of this infrastructure set up and start serving the clients as quickly as possible.
Yeah.
And it doesn't surprise me, considering that like a month ago, I think Gemini announced, we're going to tokenize real world assets and equities and let you trade it on Gemini. So there's that integration that everybody is kind of seeing as the diamond in the mine.
Yeah, it's going public. It's an entirely new journey. You are now faced with new realities where people are able to vote with their feet, or stomp you with their feet in terms of shorting your stock in real time, right? And so it's very, very difficult to hide any potential warts. You've got to do a really good job of explaining the long-term, opportunities to hold those people off, right? So they went to market at 28, they bounced up to I think 40, and it's currently now at $24. And so it's down about 25-30% from where it was a couple days ago. And so again, there's going to be folks that decide, okay, we're going to evaluate this as an ongoing company that has to report quarterly earnings. What do those earnings look like? What is their run rate? How much cash are they going through? What is their cost to acquire a customer? What are those individual customers doing to generate revenue on behalf of Gemini? All those things, right? That they're going to have to figure out, going to have to get right.
But heck of a lot more stable than some of these treasury companies, which is
For
kind
sure,
of a good pivot.
For sure.
Chris, I saw you talking with Melker yesterday, or I think it was yesterday, about today, about about Nakamoto, and that Scott might have pulled the trigger at the bottom there. What's your take on Nakamoto? And if you're at an MNAV of 1, don't you think that's kind of a glaring green light? I mean,
Yeah, I mean, for me, I mean, I'm looking at it just based off the chart. I mean, I love the current position of it right now. I love the pullback. I love the volume. Looks like capitulation volume right into the monthly S1 pivot, gap down there. I mean, and then bounce, and we got bullish divergence built on RSI. I mean, it's just from a technical perspective, there's so much to be excited about buying down there. And I set up a trade in there for our people over at TexasWest Capital yesterday. I think it was, as a matter of fact.
What
significant upside?
Give me a range of what prices that. Where do you think the buying opportunity stops?
I mean, I think like I'm looking right now. If what I'm seeing plays out, it should go to a new all-time high significantly. It should go into the hundreds of dollars.
Well, see, here's the craziness of this market. He may have, like David may have created the trader's paradise. You know what I mean? Like just these giant volatility swings, like a channel that's, from top to bottom as wide as the Grand Canyon that just lets you trend trade this thing. Based upon the MNAV and the MNAV alone, it kind of simplifies it for you. It's like, how much Bitcoin do they hold? What should their share price be in a 1-to-1 ratio? And what are they trading at? Like, that's kind of isn't that the basis for judging all of these treasury companies going forward?
Yeah, I mean, if not, it should be, right? I mean, because again, it's Bitcoin, right? And but I mean, I think you're asking where's a good thing. I think you're good to get in. I mean, I think obviously there's no guarantees, and it could even drop a little bit lower there if it did. But I think at the end of the day, I think if we're not at the bottom, we're pretty damn close. And your upside potential is in the realm of, God, just on the next leg up. Let me look at my chart here.
I like my cost basis to always be lower than the executives, and it is right now.
It is right now, exactly. Yeah, no, that upside on that, man. I mean, we're looking at, what is that? I can't say. Oh, okay, it's over there. It's hidden. God, man, like, I mean, I don't know how many times y'all have bought in and made like a 37,000% price appreciation in what you've bought, but man, that's what we're looking at. I'm looking for this thing to really kind of move. And the worst case scenarios, we've got our stop where we've got it, pretty, below the drop there. So I mean, again, even if it did drop a little bit lower, it would just give even more reason to be looking for another entry, and potentially you're going to get even greater significant return on that. But right now, that trade, if that low holds, our trade, one that by the time it hits that target up there, is like 37,000%.
Holy cow!
I mean, it's insane, right? I mean, these are the opportunities I think that are here. These are the opportunities you take, and this isn't just like a blind. Oh, it's low, and it just drops. I'm going to buy, right? There's more that's gone into it technically, but
well, here would be. The way I look at it, and y'all critique it. I'm interested. This is obviously uncharted territory, but I look at the MNAV as being cash reserves with a force multiplier and growth potential attached to it. Like if a company has $1 billion in cash and the stock price is representing $1 billion of value, there's no growth potential in cash. There's erosion potential. But whatever you want to appropriate to the growth potential of price of Bitcoin should be recognized as a force multiplier in these treasury companies. Why? Because they have more debt capabilities than you and I do. So there's a value there, right? They can borrow money when we can't to buy Bitcoin. That is a value that should trade at a multiplier of MNAV, right? If they're doing their job and acquiring Bitcoin on a consistent basis. The question then becomes, though, if a company is trading at a 2.7 MNAV, do you equate that to buying Bitcoin at a 2.7 multiplier? Is that the same thing to you, or is that too far of a stretch?
Me or Andrew?
Either one. Yeah.
Okay, Andrew's not going to jump up here and say anything. So no, I think that sounds all right. I don't think it sounds really out there or anything. That isn't normally the way that I approach. Again, I tend to approach based on charts. But here's the thing, I know a significant amount about economics and whatnot. It's all part of my educational background. So, even though I don't use that to trade off of, when we're talking about things like MNAV, like you're talking about, or, economic indications are going on or whatever, again, I use my experience and my education to kind of figure out what that maybe means. And if my charts are basically saying the same thing, that gives you like just this super bit of,
well, it means that the big money believes the same thing that the
Yeah,
thesis is
yeah.
saying, which is that the floor should be an MNAV of 1, which
Yeah.
we're at.
Yeah, because below it just doesn't make sense, right? I mean,
No.
it really doesn't. So, yeah, I mean, if I'm looking at it, I'm thinking things are set up, pretty decently there. But, there's always that human element, and it ends to show.
But if you're playing with money you don't need tomorrow, right? Then the
Like I said,
risk. It's always about that risk reward ratio. And what I hear you saying is there's a heck of a lot of reward ratio here, with
justifies taking that position.
Well, I mean, the risk is that the share price goes to 0, and they're holding $1 billion+ of Bitcoin. It can't go to 0 unless Bitcoin goes to 0. I would, that would be my
Bitcoin as much. I mean, obviously we can't guarantee anything, but the odds of Bitcoin going to 0, I would venture, is pretty insignificant. I don't think the odds are even anywhere close to anything that people have to worry about. Though we still, see people claiming that. It's hard to believe 16 years of what Bitcoin has done, and people are still saying it's going to 0. It just, at this point, it's just, they just made a choice. They chose the hill to die on, and come hell or high water, they're going to die there, just other than that, it doesn't make any sense. Okay, I'm going to assume they agree with me, since neither one really saying anything. So we're just going to assume they agree.
I'm just leaving space for the more sensitive host. I mean, I want to leave space for him to say what he wants to say.
Is he sensitive now because of the
seems like he's teasing us with his silence, so I'm giving him room.
I've heard a few sighs. In here.
Yeah.
No, I the whole Nakamoto thing is interesting. It's a case study in, be careful what you wish for, because there's a lot of other angles to it than just, hey, we're going to set up a company and buy a bunch of Bitcoin and it's going to be awesome. Yeah. Now to Nakamoto's credit, they do have the rights to, for example, purchase BTC Inc. They have the rights to purchase the Bitcoin conference. They have the rights to purchase Bitcoin Magazine, meaning that those are revenue producing entities that would change the nature of Nakamoto from simply a Bitcoin purchasing via debt and other issuance to revenue producing type of entity. So, I think there's value there.
So you're saying feed the frog? Is that what you're saying?
Probably. I've considered putting a little bit of money into it. There have been moments where, in my own personal investing history, when it just seems like it can't get any worse. I've had the instinct to say it can't get any worse, and I've been right on a lot of those occasions. And so, it's like Bank of America's trading at $2. There's no way Bank of America's going out of business. I don't care if it's 08 or 09 or 2074. It just won't. And other, opportunities. So, yeah, I mean, I think, at $1.50 or $1.40 or $1.60 or wherever it's at, could it trade down to 90 cents? Sure. But it's, they've got some levers to pull.
Well, if it's trading at 90 cents, mm-hmm. right, then you're buying Bitcoin at 70K.
Right. Agreed.
Sounds like a pretty good deal to me.
So if you wish you're buying Bitcoin at 70 and you wish you would go back down there to buy it, here's your opportunity, potentially on that kind of pullback, right?
Yeah, well, if you want to make that equation, right? It's a little bit of a exercise here of imagination, but MNAV is that. Everyone's agreeing it is. And I can't see an angle that if you were buying stock in Tillman Holloway and you were only buying it in Tillman because of how much Bitcoin I held, well, it seems like there would be a floor price of the stock of Tillman at how much Bitcoin I held multiplied times the share price of Bitcoin or the price of Bitcoin. I can't get around that hurdle from a valuation perspective. You know what I mean? It's just that simple.
I think that their Bitcoin holdings are worth, right around 600 million bucks. And, again, Nakamoto as a company right now is worth about 500 million bucks. So, if that's your bottom line thesis, it's, probably a pretty decent thesis. But to go from 500 million to 700 million isn't a move to $5 in the stock. It's a move of about 40 cents in the stock. So, again, all caveats, you could make 40% on this thing, you could lose 15% of it, or you could make 400%.
Or they could announce tomorrow that they didn't really buy Bitcoin and it's all vaporware, and you could lose it all. That's.
I wouldn't be, honestly. My thought process would be like throw 10 grand at it. Like I'm not putting a meaningful amount of capital into what is actually currently a penny stock. Anything else that we were to look at in the traditional world that's trading at $1.48 is like, this Wolf of Wall Street type space. Do they have an actual office somewhere, or is this just not real? Right. But because we know about it, and we know the people and all that stuff.
Well, we know how much Bitcoin they're holding is what I care about. I know the people, but I don't care that I know the people. Right. It's really like, how much Bitcoin do you hold? Oh, you own a bunch and I can buy a piece of that? Great.
Yeah.
No, I thought, so, okay, good. Looks like we're all kind of in that same boat with that. But I agree with Andrew. It's not something you go and you throw in a ton. I was even thinking, man, if you're going to do something, maybe you toss 1,000 into it. If it hits my target at 37,000%,
and if it doesn't get anywhere close to your target, it goes from $150 to $8, you've made 700%, right? Yes, so exactly. Your 10 grand turns into 70 grand. That's pretty good, right?
Yeah, listen, I even look at it as less than that. I look at this as the same reason why I would buy GameStop. It's like, I want to be at the water cooler and be part of the cool crowd and talk about the fact I own Nako, feed the frog. I want to be able to say that with some conviction.
If you don't come on next week with some kind of frog mask on, the amount of times you said that already now, I'm gonna be very disappointed.
I'm here for it. I'll be the lead corso of the show. We get masks and I'll throw them on. As long as you guys don't make fun of, when I throw on the Pepe mask or the Flair.
Listen, this is a unique opportunity to get invited to like the elite VIP party at the next Bitcoin conference. Because if you were a Nakamoto holder or you held more than 1,000 Bitcoin, you got to come to a special party that wasn't even like the whale.
1,000 Bitcoin? That's it? Golly, that's a bargain at twice the price.
Yeah. So, anyways, it's part of the fabric, whether good or bad. The Bitcoin conference, Nakamoto, Bitcoin Magazine.
Listen, I already know. It's part of that room with the people who own 1,000 Bitcoin. I'm envisioning what it looks like, and I don't think I want to be in that room. It's like 11 people, and they're all isolated in their corner with their publicist standing in front of them.
You and I both know Carly Benson. She set it up, so it had to be pretty good. Okay.
Yeah, true.
Pretty good.
Yeah.
All right. Well, hey, man, listen, as always, a good time was had by all. And if you wasn't, you were wrong. Come back next week and try again. That's what I like to say. Just no arguments, no nothing. Just you're wrong. Come back next week and try again. If you're in the audience and you didn't enjoy this.
Is this the replacement catchphrase?
No, of course not.
No.
He's gonna hit it hard.
Don't worry.
Okay.
Because what? The only thing you control is how much you lose. And Andrew proved that by taking a bet that, unfortunately, he didn't have to take the bet, but he took the bet and lost his beard.
Yeah, but that's
Yeah,
not true.
I-
It's just you're literally taking one anecdotal piece of evidence and appropriating it across a broad spectrum
Have
of
you seen his
applications.
face without
There's
a
not
beard?
one thing he could have controlled in that environment. He could have bet something other than shaving his beard, like money,
And he would have controlled him losing the beard, right?
Yes,
He
but
would have
that
done
is
something
not the
different, so he
point.
controlled
The
that.
point is
Listen,
what I'm saying is
Chris,
absolutely true,
Chris,
and what you're saying is
I would-
occasionally true. So
I
which
would
one are we
encourage
gonna?
you. I would encourage you not to argue with Tillman. I've attempted a few times as his business partner and close friend. It's sort of like a Chinese water torture.
Chris,
All right,
the
You
further
know
we
you're
go
gonna
down this
lose.
road, the more.
It's not worth it.
See?
And if it gets too bad, F words start flying at you. You know
All
what I
they
mean?
do is
Like,
this, though. Just mute him. So at the end of the day, it's not like you and him arguing because you can't mute him.
Hey, listen, fork you guys. That's all I'm gonna say. Fork off.
All right, guys, man, we have way too much fun, which means we have to have even more fun next time. All right. Hey, listen, just show up, guys. Just show up. This is a great show. We have a good time. And next week, we'll continue to see the growth of Andrew's beard. And I promise you, the more it grows, the better he's going to look. Because as we decided before the show, the less of his face you can actually see, the better it is. So, there we go, right? If you need a reason to have a beard.
We're going to do a time lapse of the beard growth, and I'm going to make a little cute animation where he dances and sings something, maybe something from like that K-pop show or something where his beard's growing out at the same time. It'll be great. That should be our intro. We add it to our intro.
We do have a media team that could actually do that. That could do that for us. That could follow over a period of time, given the shows that we do. How
I mentioned he looks like the turtle from Mario Brothers. One of our guys made an animated character of the turtle with his face superimposed on it, and it's pretty good.
With little glasses,
little glasses.
Yeah.
So why hasn't that been shared on X yet?
Andrew's too sensitive. His ego. Once they get KOL status, Chris, they change a little bit. I'll just be honest with you.
See, it's these little things. I keep this little book of slight from Tillman, right? When I was giving my talk at the Bitcoin conference, he didn't text me this, but he had somebody text me this. He said, and they texted me, Tillman said black is slimming. That's what the text was. I never responded to the text, so the guy that sent it probably still feels bad.
Listen, I needed to see how well versed you were in your speech. If that threw you off, then you're not a true professional.
That was sent to me during the speech, by the way.
Listen, I needed to see number one. I knew if I texted you something, you wouldn't read it. So I had to go through subversive tactics to get the message to you. And you handled it beautifully. You passed the test, man. Good job.
With friends like that, who needs enemies, right? All right, guys, let's get out of here. We've held these people long enough, like gunpoint, right? But anyway.
The only thing that you can control is how long you listen to us on the podcast. So that's the only thing in life. You can't control anything else. So you guys focus on that one thing.
All right, y'all have fun. Thanks a lot for showing up, guys, as always, and keeping this entertaining. Everybody else, make sure you show back next week, and we'll see Bitcoin going up, right? There you go. All right, take care, everybody.
Hey, guys.
Trading tip: always manage risk before chasing gains.